Howdy there, folks. Welcome into the reaction channel. One video and one video only for me to react to in this one here today, okay? I want to react to this first segment from Fast Money here today. I actually just watched this, and there were so many things that were wrong in my opinion. So many wrong perspectives, views on everything that's going on in the market that I was like, I'm going to have to react to this beast. So I'm glad I had recorded it on Fubo. I'm going to show it to you guys here, react to it in real time, give you my opinions and perspectives, because like I said, a lot of times I just find like these takes are just really, really bad, and they're just not like looking a little forward and things like that. So appreciate everybody joining me as always. Thanks so much, folks. Thanks for being subscribed. 27,000, and now we're over 27,500 plus subscribers. So I appreciate every single person that's subscribed to the channel. Also, if you want to apply to join my private group, that's going to be the pinned comment down there. If you're looking to join my Patreon, see the moves I'm making in the market, plus be part of that Discord chat, check out the description area. Alrighty, guys, let's get into this.
"Quote unquote tremendous potential in AI, adding fuel to this fire, but there's an unusual dynamic under the surface. Retail traders appear to be sitting on the sidelines even as the stocks are rallying. Individual investor flows into AI sensitive names have been muted, according to research firm Vandatrack. So why isn't the AI hype driving traders back into the market? Or maybe they will go into the market and fuel another leg higher." Grasso, what do you think?
Okay, so first off, to put all retail traders, investors, whatever you want to say, and say, they haven't been buying any of these sorts of stocks. No, that's inaccurate. We definitely were loading up on a lot of different stocks in this context, right? Palantir being one of those, which we all identified as a major AI play way before Wall Street got on this AI bandwagon, right? We've been talking about for over a year that Palantir's at the cross section of data and artificial intelligence and helping a business and governments and everything make better decisions, right? We were talking about that way before AI was like everybody's talking about it on CNBC and whatnot. So, don't put everybody into the same group.
The retail investors normally like cheaper stocks. They like lower price stocks. They can buy more of that stock. And if you look at during the meme era of stocks, they were buying a lot of cheap stocks, a lot of heavily shorted stocks. You can't say that now. NVIDIA, no short interest. NVIDIA, over $300. So I guess if you look at C3 AI, that's as close to it as you can come. Look at the chart on that one. That looks to me like retail investors have been buying it, selling it, buying it back. Cheaper stock than NVIDIA. Its name is AI, right? So that one probably tests that premise right off the bat.
Yeah, and its ticker is AI.
So first off, my opinion in terms of C3 AI and our retail traders playing that one. For that one, I wouldn't be surprised. To be quite honest, it is one of those that, especially a lot of people that don't know what the heck they're doing in the market, like to play a stock like that and like, oh, AI, I'm going to buy the stock ticker AI, right? And there's definitely that group of individuals out there, right? But you're really going to split retail. There's two camps of retail, okay? You have obviously the people that really have no clue what they're doing. They're just gambling money around. They just treat the stock markets like it's some sort of casino, and just whatever is exciting or, whatever way the market's moving, they just move that way, right? Those people always lose over the long term. We do know that, right? Then you have the camp of more intelligent investors that are looking into companies, fundamentals, conference calls, annual reports, looking at what a company actually does, right? How does their product differ from other companies? Thinking about SWOT analysis, right? Strengths, weaknesses, opportunities, threats to companies, looking at the valuation, looking at the financials. And that's another segment. And I can tell you that's most of my segment that follows myself on the channel, right? And so those are two very different camps. And so I think to that first camp, C3AI is an interesting opportunity. I think for the more intelligent investors that actually do the work on this subject, they've been positioning into NVIDIA and Palantir stocks like that for quite some time, and that's nothing new to them, right? Nothing new to us at all. And so now a lot of us are just letting our chips ride.
How much is that ticker worth today? Banu, what do you make of this trend? And do you think, it's just a matter of time before retail starts getting in? I mean, the point in the note was also that it was banks doing a lot of the inflows into some of these names.
Yeah, I think Steve makes a lot of good points, and I agree with some of them. I'm kind of looking at the same thing, but from a slightly different lens. So let's take a look at some of the names that were heavily involved in by the retail, right? Tesla, AMC, GameStop, and then Bitcoin. Tesla's down 50% from its 21 peak from 407 to 197. AMC down from 3640 to 474.
I never like when you use the exact peak of the 52-week high or the all-time high or something like that, and it makes it sound like, oh, all retail got in at that price. Somebody like myself is up. What am I up on Tesla? 700+%. You know what I mean? Like once again, they just group everybody and say, oh, everybody bought Tesla at 407. It's like, what? Some of us have $20-something cost basis on Tesla. Come on, man.
GameStop from 81 to 2373, and Bitcoin from 64,000 to just shy of 20. So, I mean, if you look at the carnage, what do you think that does to the psyche of a retail investor? I mean, a professional investor would be taking pain. It would likely have his risk manager tapping him on the shoulder right now. So I do think there's a certain psychological aspect. And then you look at like the housing boom that happened.
That's a fair comment. Definitely, I think for a lot of that 2021 crowd, right? Those people had no clue what they were doing, and they got wrecked, obviously, and they left the market. Or the ones that didn't leave the market, there was a certain amount that made it through and started taking investing more serious and like, I'm going to learn this for real, right? And congrats if you were one of the 2021 crowd, because it's not many of y'all that made it, right? Then you had a certain amount that got wrecked on the long side of all those risky stocks, right? AMC, GameStop, everything else, okay? And then what did they do? They flipped to the short side, buying put options, shorting the market, and have just gotten absolutely obliterated the past 9 months on the other side, right? So that's definitely happens. But, congrats to all you guys that might have been in the class of 2021 and you've leveled up.
Throughout that same period, that offers an alternative to where you would be investing those dollars. So you've been burned in this high volatility situation. You're now able to park your money in a more stable asset and get similar appreciation. And the last thing is just with the reopening of the economy and return to offices, we can argue the extent thereof. You just don't have as much time to fixate over how you're going to be trading your portfolio around. So I think those two.
Boom. That is such a phenomenal point. Now that was great. Okay. 100%. Because the problem is, for especially a lot of retail, is as soon as everybody started having to go back to office, which certainly is what happened in 2022, right? There's definitely like the demand from folks and interest in the market definitely started to wane, and it started to go down, and it's continued to go down, right? Because people are busy. They don't have all the time in the world to keep up with the market. And so the only people that do are really the people that are like myself, maybe a lot of you guys, that you love the market, you're super into the market. It's like, you love this stuff, right? And so you're always trying to keep up what's going on, stocks, earnings, all this stuff. But let's be honest, most of that crowd that got in during the Rona time, right, in the lockdowns, like those people were never that into the market. The only reason they got involved probably because they had too much money around, especially with stimulus and whatnot. And they just heard other people were like myself and many others were making a bunch of money. And they're like, oh, let's get in, right? And then at the very end of 2020, stocks went to the moon and beginning of 2021. And then we know how all that ended from there, right? And it got really ugly really quickly.
Dynamics together make it, a bit more challenging for the retail investor to participate.
Are you surprised by this guy?
I'd agree with what Steve said and Bonawitz said. I think that's exactly right. Steve's point about these stocks are expensive in terms of a price level makes a lot of sense. And Bonawitz's point about these folks getting burned, look at AMC, look at where GameStop is. Bitcoin is a great example. On top of which, I don't think people have the time necessarily that they had in the peak of COVID when a lot of people might have been home working clearly, but had more time on their hands to actually trade stocks. So I think it's a function of all those things. I don't know if it's a tell necessarily on the market or where we're going, but I think it's important to bring up. And I think to a certain extent, I think we've explained a lot of the reasons why they're not there.
Yeah.
That was such a delusional crowd. I don't know if you guys know this story or not, but I basically, this is in AMC was in this super hype phase, right? And I said there's less than a 2% probability or less than 1% of probability, something like that. I said of AMC going over $100 a share, right? And man, then the next day after I had said that, I mean, people were out for blood. I even had other people that were big in the AMC movement challenging me to a fight, saying I'm clueless, this and that. And I'm just like, geez, I'm just telling you like factually what's going to happen here. And like people really wanted to like physically fight me. I'm just like, okay, y'all are really a different crowd. Thank Lord. Those people are long gone out of this market. The most clueless individuals that were just, I don't even know who those people were. Like literally, like those people exist. Like what a crowd. I never thought we'd see those sorts of people in the market. Holy smokers, that was no joke.
Tell really is the inflation in these prices. And I don't mean to cast aspersion on the term by using that term, inflation, meaning just the stock's going up by so much, Tim. I mean, what does that say about the markets and how quickly this happened? I mean, these are just jaw-dropping gains in just a couple of trading days.
Well, and I'll disagree with all the guys just to be that guy today. I think the retail investor is here. I think the retail investor never ran very far. If we look at more of the broader flows from retail investors, especially during some of the peaks of market, call it volatility and whatnot, the retail investors actually hung in there. I look at Microsoft and Apple within 2% of all.
So I don't know what he's looking at, because factually, most left from 2020 to 2021, right? That whole group, like, the data's out there. Like, it's not like this is hidden data, right? Look at CNBC views. Look at how much those have gone down. Look where CNBC views was in obviously like 2021 versus obviously today. You can see something like that on Social Blade, right? You look at the entire finance space. You can look at finance-related companies. Look at how many everybody that was in the finance space wanted to run ads and do sponsorships and those sorts of things. Those are long gone because the interest isn't there. So those companies aren't doing those sponsorships anymore because it's just, there's not enough interest for it. Look at a company like Robinhood and look at how many users they've lost. Like just astronomically high, right? I mean, it's like hard to even fathom those sorts of numbers. Like, how did Robinhood lose that many users? That's incredible. And at the end of the day, so there's a small amount of diehards in the market, like myself and you guys watching this video right now, and I can tell you most just are been long gone for a while.
Highs. I look at semiconductors breaking out to all-time highs, and I think that was, obviously, we know what NVIDIA did this week, but look at semiconductors more broadly as a group. If you're using the SMH, you can see that actually not only do we break through that December 2021 relative high to the S&P, which is, I think, a very important point for the market here. Semis are leading the way, but back to the retail investor. The retail investor through difficult times, and we talked about this also at various times, where almost your Microsoft, Apple's, Amazon's, Netflix at 52-week highs were almost seen as the money market stocks for the retail investors. So retail flows overall actually belie the view and the theory that the retail investors not getting involved in this market. And if anything, the institutional positioning and the sentiment we get from Bank of America and all the other folks that measure where the professional community is, say they are the ones that are most nervous and most underweight this market right now.
Yeah, and maybe also the fact that NVIDIA had such high short interest going into the year, really tells you sort of that the institutional investor might have really questioned this and not traded this one particularly well.
Well, when you look at them, they started off as a gaming chip stock, and they were doing just under $2 billion in revenues from that. Then it became a data center story, and they were doing double that amount. Now it's become an AI story, which in conjunction...
It's very common for retail, a certain group of retail, to be ahead of Wall Street. The most intelligent retail folks are always ahead of Wall Street. It's always been that way. It always will be that way. And they beat them to those opportunities, okay? Good examples of that is the iPhone opportunity. Wall Street didn't really get it. They didn't really understand how big it was going to be. They didn't understand that this was a game changer for Apple's business model forever. And I mean, that stock would have been soaring if they understood it, right? But they were looking at it and they're like, wait, this $500 phone, like, who's really going to buy this? Can people afford it, right? They never understood that. They didn't understand the implications of the services business, right? They didn't understand, obviously, Tesla. They totally missed Tesla. They missed it by a mile, right? Until Tesla put up such great numbers that you couldn't debate it anymore, right? They've completely missed this AI opportunity with NVIDIA. Like, the thing that people are missing with NVIDIA, and the biggest way, okay, is this. They're missing this so big. They're looking at that revenue beat, and they're amazed by that, okay? In terms of the guidance. The analysts were expecting $7 billion, now the company's talking about $11 billion. The point they're missing is they don't even have a conception of the margins, the EPS those chips are going to throw off to NVIDIA. They don't even conceptualize that. They're totally missing this by a mile. They got to understand, NVIDIA's selling these chips for what it looks like between $10,000 and $30,000. They could be making thousands and thousands of dollars of profit per chip. That's like something NVIDIA's never, ever seen. That's like something no company's ever seen. You've never seen a company make many thousands of dollars per chip they sell. And you run those numbers and you start to realize, oh my gosh, do you know what NVIDIA's EPS is going to be? Their net income is going to be over the next several quarters? And so I always, I think Palantir in that opportunity, I think retail's way ahead of the game on this. We'll see how it all plays out, but I think the Palantir shareholders are going to be right in this situation, and I think they're way out in front of Wall Street here. And I think over the next several quarters and several years, Wall Street will wake up and realize, oh gosh, I think we're a little slow to act in this whole Palantir situation.
We'll use the data centers and the gaming chips, so now everything is clicking all at once, but these valuations have blown out to what we considered extended, now are tremendous, enormous, use any word that you want on it, but it's very hard to figure out where you should be a buyer of these names. Sometimes you just have to.
Yeah, so in terms of that sentiment about these valuations that have blown out, based upon what? What are you looking at? Are you looking at trailing PE? Sure, it looks really, really high on a stock like NVIDIA. Are you looking at what analysts are expecting for forward PE and you're counting on those EPS numbers? You're counting on those EPS projections when they were just massively under what was expectations? You understand whatever forward P you're seeing for NVIDIA right now, it's probably half that. It's probably half that, okay? If you're seeing an 80 forward P out there for NVIDIA put out there, it might be a 40. And when you take it into a context of a company growing, let's say 60, 70% revenues over these coming quarters, oh boy.
Your nose, because expensive stocks have a way of getting more expensive. Cheap value stocks get even cheaper.
But I think part of this is just the
expensive stocks have a way of eating up that what you thought you were paying as expensive and eating up and just getting much more profitable than anybody anticipated. Tesla was a great example of that. Company got so much more profitable than even bulls like myself expected, right? In what looked like, oh my gosh, Tesla's so expensive, all of a sudden started to look like, wow, look at their net incomes they're starting to throw off. Look at their earnings per share. I mean, it was an expensive stock. Now it's a cheap stock. And so that's something, NVIDIA's done that several times throughout its history where it made a big run. And it's like, wow, this stock looks so expensive. And then you saw the net income coming in the future quarters and future years, and you're like, Jesus, stock isn't expensive. AMD's done a great job of that. Amazon's done that several times throughout its history.
Change in the perception of NVIDIA and a lot of these chip stocks in just the past couple months. I mean, remember in March, NVIDIA was announcing a 4% cut to its workforce. I mean, things are viewed completely differently just a couple months ago, Guy, and here we are talking about NVIDIA and talking about AI basically saving the market. I mean, take a look at the massive gains in the mega cap tech stocks thanks to AI.
Yeah, no question. It's saving the market for now, for sure. But I think, as Carter's going to say in a couple minutes, is it's setting the market up for something else. And NVIDIA, you go back a couple quarters, and they weren't saying particularly great things. And then the AI realization came, and they really hammered that home. They did a remarkable job, a masterful job of sort of focusing on that.
So NVIDIA just beat revenue guidance by about $4 billion, right? So let's say average selling price of their new AI chips are $20,000, which I don't know where it's going to shake in at. It could be closer to $10,000, could be more toward $30,000. So let's just say hypothetically it's $20,000 average selling price. Do the math on that. It's only 200,000 chips sold. That's not like some crazy number. And when you understand, like, companies are going to be ordering tens of thousands of these chips and likely ultimately hundreds of thousands of these chips, maybe even more in the future, just on an individual by individual basis, it's like, oh, is this really that crazy?
There are other businesses we're not doing as well. Now, those businesses are catching up to a point. But again, to Steve's point, valuation right now at $1 trillion effectively, I'm rounding up clearly. It's even if the most ambitious people out there in terms of revenue, you're talking about a stock that's probably trading 25 times revenue.
And then on top of the raw chip price you'd pay to somebody like NVIDIA, you're likely going to have to pay a huge amount for them to connect it all and make all these chips work together, right? That's another factor you got to take into account. Like, XYZ company orders, 50,000 of these AI chips. Okay, great. Now you got to make all these so they all work together, right? And that's where NVIDIA's deal, I believe it was for Mellanox many years ago. That's where that comes in handy in a major, major way. So that's just another huge way of NVIDIA making a bunch of money.
That's historic for a chip stock, especially with a chip stock with that market cap, which we've never seen before.
Wait.
Yeah, I mean, a $1 trillion.
People out there in terms of revenue. You're talking about a stock that's probably trading 25 times revenue. That's historic for a.
It's completely irrelevant. All that matters is the profits. All that matters is the market's never driven off of price to sales ratio. It's never been driven off price to sales ratio. Never will be. It's a cool metric to look at, but that's not what drives the market. Earnings do. And so tell me what NVIDIA's forward P is. Do you believe it's 80? Do you believe it's 60? Do you believe it's 40? Do you believe it's 20? I think that's the whole subject we should be talking about. And if you are going to say this company's growing at a 60% plus clip, which they're expected to grow next quarter, then what's an expensive forward P? Because we know 20 is way too cheap for a stock growing like that. 40 is way too cheap if you're talking about a stock that's going to be growing revenue 60+%. So then in that case is, 60? Is it 80? And if, that sounds about right, does it not?
For a chip stock, especially with a chip stock with that market cap, which we've never seen before.
Yeah, I mean, a $1 trillion valuation.
Just because a market, you've never seen a $1 trillion market cap on a chip stock is another irrelevant point. It's a cool point to make, but it's an irrelevant point. Just as we never had seen a $1 trillion market cap before. Just as we had never seen a $100 billion market cap before. Just as we had never seen a $10 billion market cap before. Although it's just arbitrary numbers, it means nothing. We've never seen a $10 trillion company before. We will. We've never seen a $5 trillion, well, maybe Saudi Aramco. You will see multiple $5 trillion companies.
27 billion in revenue. I mean, listen, there's no argument against the fact that the valuation is stretched. I don't really think that's what it is.
That's backwards looking data. That's just a horrible way of looking at it. By looking and saying, well, they were doing 27 billion. Well, they just get guided for 11 billion this next quarter. If you say they're going to do 11 billion, which maybe that number's low because they could potentially do a lot more than that, right? You're at 44 billion. But once again, you shouldn't be valuing the stock based upon price to sales ratio. It's a forward P number you should be looking at for a company like this, right? And when you understand like that they're going to be potentially making thousands of dollars per chip sold, I mean, it could be a possibility. Like, let's say it's a $30,000 chips. Something in those price brackets. Are they going to make $10,000, $20,000 per chip? These are numbers you couldn't even conceive of in the past.
To me, at least, is that NVIDIA is kind of viewed as this tangential play as opposed to a pure play, which inherently will have more risk to live and die on this AI theme, so to speak. So NVIDIA still has this use case well within gaming. You saw the same type of dynamic happening with the whole Web3 move, right? Meta came out and announced it. The logic was that, listen, you're going to need this processing ability that NVIDIA clearly has a leadership position in order to kind of make this move. And I think it's the same situation with AI, where there's still an underlying operating business that supports.
This is in all due respect, this is a bad point. And I've heard other people trying to make this point as well. Be like, well, metaverse was supposed to be this big thing and it hasn't really turned out to be this big thing. The difference between metaverse and AI is we're seeing it in the numbers, and we're seeing it from actual company CEOs saying demand for their products is coming in interest is unprecedented, right? So when you hear CEO after CEO that deals in the space, and you hear a company like NVIDIA just guide for shocking upcoming earnings that no one ever anticipated, this is like real. Like, this is actually happening. We're actually seeing it in the numbers and actually what these companies are saying, not just like, oh, we think the metaverse could be something big someday. There's a big difference between what happened then versus now.
Some type of cash flows there, and then you have the upside with the AI adjacent, as opposed to chasing a name that is going to live or die on its ability to deliver on the AI front.
But all that said, do you like NVIDIA here?
I do. I mean, although I have trimmed some, but that's just about freedom risk management. But in terms of did I get out? No, I'm still in.
Okay. Let's dig deeper into NVIDIA's big gains this week before Wednesday's earnings report. The Chartmaster thought this chart looked so good, it was bad. Of course, we know that hasn't panned out so far. So what's the next move for the chip stock? Let's bring in Carter Braxtonworth of Worth Charting. Carter?
Yeah, I myself bet. I own puts going into the numbers, so perhaps you don't want to hear anything more from me on the subject.
This is why I was so freaking tempted. I even had text a friend about this. I was so tempted to play calls on NVIDIA this week, which is just, that would have been a gambling move, I'll be honest. And I don't usually do stuff like that, but I was so tempted. And the reason I was so tempted personally is like, I knew all these Wall Streeters were going to be thinking this. Oh, NVIDIA's going to have to tank. All this AI stuff isn't for real. And I just knew NVIDIA was coming with something. I didn't know what. I had no clue it was going to be that sort of guidance, like that insane. But I had a feeling like the stock was going to move up. I thought maybe like 5 to 10% move, not like 25% move. But I knew it, man. And so many of these Wall Streeters just went in like convinced, like, oh, yeah. And it's like, you know, you got to let this stuff play out, man.
I'm in an equally strange position.
Don't play it on either side.
Put out my Monday piece titled Semiconductors, Make Sure You're Long Semis Relative to Tech. It's a perfect example of do what I say, not what I do. Semis doubled the performance of tech, up 10% versus the tech sector up 5%. Decent idea. And yet I myself went and bet that it would have an outsized move and it would be down. Let's look at a few charts and figure it out. So NVIDIA, in relation to its 150-day moving average, with this gap up, you see it there, but let's put it in context. Look at the next chart. Now, this is going back 10 years, and again, you're just simply seeing a stock, NVIDIA, with its average trailing price over 150 days, 150-day moving average. Final chart for NVIDIA, look at its percentage right now above the 150-day at basically 78, 79%. This is as steep as it's ever been. And if you go back in the history of the data since its IPO, you're getting also one of the most extreme readings on record, which is to say, typically when it's gotten this far, it's right to trim, sell calls, take some measures as other people sort of lose their minds.
Would you, but this is not
lose their minds. It's just such a funny perspective, right? I'm not even an NVIDIA shareholder, but I got to stick up for it because I'm just like, this is a way they're losing their minds. Maybe you lost your mind trying to play puts into earnings when all of a sudden every corporate CEO and CFO out there is trying to come up with an AI strategy right now. Maybe you lost your mind, sir. Like, have you considered that? Maybe we should consider that.
prompting you to say to...
Have you considered that analysts had NVIDIA growing 6% revenues this upcoming quarter, and now NVIDIA just said they're going to grow 60% plus revenues? Have you considered that?
The position in NVIDIA.
Oh, if I had this as an individual, or if I were managing a portfolio on behalf of other individuals at the professional level, mutual fund, hedge fund, I would be reducing for sure.
Mm-hmm. So, Carter, why don't you take your own advice? I'm just curious.
Yeah, well, that's why they have that expression in English. That's why it's too. Well, so again, what I also could have done is done a straddle. At the end of the piece said, if you don't want to be directional, buy a straddle. That would have worked too. I just thought we'd get an outsized move, and I said, you know what, everyone loves this thing, let's bet the other way. But the beauty of options, of course, you can hear more at 5:30, is that you spend less to make more or lose less.
Right. Carter, thanks, and we will see you on Options Action at 5:30. Tim, that chart's pretty scary looking.
It's scary looking. We've seen how these charts can get scarier looking. One of the conversations we were having this morning on our call, a guy was talking about rotation out of healthcare. And I think there's rotation across a number of different, obviously, defensive sectors, not just staples, not just even, CPG, and even where we've seen some of the consumer discretionary that's been very resilient, like a Nike or Lulu. What you're seeing, though, is broader rotation into higher growth stuff. And it's not just 5 stocks.
That's a good point. And here's the thing. If you've been hiding out all your money in safety stocks, let's say, for instance, right, betting that, it's end of the world, a huge recession, blah, blah, blah. And then NVIDIA comes out and says, we're going to grow revenue 60% plus next quarter, right? And we just went through earnings season. And what we heard is actually companies are fairly optimistic on the back half of this year, right? You start to lose more and more confidence in terms of your recessionary calls and hiding out in all these safety plays, right? All these safety stocks that are supposed to be the safe place to put your money, you slowly starts to erode. And I can tell you if next quarter, again, we skate through that and let's say companies get even a little more optimistic, right? As time rolls on, you start saying, what the heck am I doing hiding out in Kraft Heinz stock? What the heck am I doing hiding out in, Campbell's Soup, in General Mills? I should probably position out of these, right? You start to say, why am I just in treasuries? I need a position into, and so that's a whole game plan that hasn't even, I think we're at the infant stage of that. I think if you go through next quarter and earnings are looking even better for companies and they get more optimistic than they were this past quarter and things look a little more clear, I can tell you the positioning for the back half of this year will be a flood of money. And if you think the move we've seen so far is a big move, you haven't seen yet. Especially if you start seeing CPI with a 3 and then 2s. I think we're headed there sooner rather than later, which then takes out the inflationary problem out of the picture for at least the next 12 to 18 months. Oh boy.
What's going on in communications? Look at what's going on in software. Look at CrowdStrike, Okta today. Look at Adobe. So to me, part of this is part of the same story. And I would look at the triple Qs against the S&P. And if the semis have taken out that Dec 21 high, I think the Qs are going to do the same thing. And I think they have probably 10 or 15% up to that relative position to the S&P again. So you could divide the Qs, divide by the SPY in the same way we did today, the semiconductors against the SPY. I think that's what we're looking at here for the broader market. And that's why I wouldn't be fighting it in the absence of a debt ceiling fiasco and a Fed really articulating a much more aggressive policy. This
is why for my hedge, SDAL going into this year, such a perfect hedge. All those stocks were overvalued. If the market was going to start coming back to life, people are going to obviously position out of those safety stocks and start to position more into the NASDAQ stocks, which is exactly why I didn't want to do anything short the NASDAQ. It would have been a horrible hedge because everything would have been completely worthless as of right now, right? Whereas SDAO is still in the game. And then I knew, like, if the market tanks big, the Dow's going to go down more than any other index. And sure enough, like, look at how the Dow's done versus the NASDAQ. It's like night and day difference. Look at the Dow versus even the S&P 500, right? So that positioning has just been, as perfect can be for a hedge.
Are doing right now, and I think you stay in this trend.
Yeah, I mean, it just seems bizarre kind of guy for talking about this, possibly hitting up against the debt ceiling and possibly going into a recession in the back half of the year to be in high growth, high multiple, rising interest rate environment, high growth, high multiple stocks. And yet here we are. That's where you see the gains.
And that's listen, I've been flummoxed by the entire thing, but that's what's going on, right? And Tim makes a good point. I mean, Adobe's gotten off the mat. Adobe was a $700 stock.
If I recall, this gentleman also was short NVIDIA. I believe that's what he said on the show right after NVIDIA reported. I never heard him sound so depressed in my life. Yeah, he said he was short on that episode, and it's just like, yeah.
November of 21, and I think it's trading 415 or so now. But I understand what he's saying. It's bounced nicely as well. So you have participation now on a broader set of stocks, but it's these big, again, these stocks with market caps north of $500 billion and up with moves that are, we're going to talk about Broadcom in a little bit. Look at the move today. I mean, I'm jumping the gun here, but it's not normal to see companies of that size have 10% moves over the course of a trading day. Now, can it continue?
In all due respect, it's also not normal for a company to say we're going to grow revenue, or analysts are saying you're going to grow your revenue 6% next quarter, and then you come in and say, no, we're actually going to grow our revenue 60% plus next quarter.
Steve's point, I guess, but we're pushing the envelope here, folks.
Coming up, worried that you missed the rally in NVIDIA. Well, there may be a way to squeeze more gains out of this stock. We'll lay out how you can do it with options. But first, we're not quite there. Now in OA, it jumped 25% this week after earnings. It is the most heavily traded op.
Provide somewhat of a tailwind there.
All right, time for the final trade. Let's go around the horn.
This is interesting.
Palantir's had a huge run, but there's some juice left. I think the AI trade, I think Palantir's the way to play it.
Some juice left, in all due respect, sir. That company has an incredible next 5 to 10 years in front of it, in my personal opinion. So appreciate everybody joining me as always. Thanks so much, folks. I appreciate you. Thanks for being subscribed to the channel. If you're looking to apply to try to join my private group, check out the description area. If you are, actually, I'll probably have that as a pinned comment. If you're looking to join my Patreon, see the moves I'm making, plus be part of that Discord, check out the pinned, that will be in the description, actually. Much love and have a great day.